Hello everyone. In this video, I'm gonna give you a trade recap of this trade I took on BTC. This currently running. This is what to 21 hour, and then I'm gonna break down this trade, how I took it from the buyers to my entry. So stay tuned. I hope you learn something new today. So let's get into it. Let me delete all these things. The first thing I use is knowing my bias because I don't trade without bias actually. So if you go to daily time frame, you know that clearly BTC is bearish. Clearly, you see BTC is bearish, giving us what series of lows, lower lows, lower highs, lower lows, lower highs, and then lower lows, lower highs. Now another lower low. But there's one thing you need to understand. For every correction, for every impulsive move we have, right? Sorry, for every impulsive move we have in my network, for every impulsive move we have in the market, there would be a correction move and then impulsive move. Impulsive move is meant to drive the market in the current direction it wants to go, right? Current direction, which is what? To maintain this downtrend, our next target is what? The low, right? So know that, but if you can see here clearly, BTC is bullish, is bearish. So the first thing I need to know that is what? Where do we expect the impulsive move and where do we expect the correction moves? The correction moves are not coming from any random places. It's coming from zones, higher time frame zones. Let me show you guys. So if you see clearly from here, there are zones that market did not use when it was buying. Look at this. Let me go to higher time frame weekly, but weekly and daily is almost the same. It's just that I want to see lower chart on my screen because so see the first thing you see every impulse, every correction move that comes, it's reacting from a zones. Right here, you see market is what reacting from these zones. That's when we get this correction move. You see, impulsive move to break this low, and then correction move. Another impulsive move to break this recent low, and then what? Correction move. Now we have another impulsive move that break this recent low. This is the target of impulsive move, right? And then if you can see clearly, we have a weekly order block right here. The market is reacting from. This is my crypto. But if you use forex.com, you see that market tapped into this there. But let me clean this and draw it so that in a way you guys can understand. So this weekly OB, market tapped into this weekly OB. So I'm expecting a what? A reversal at this zone. Market tapped into this weekly OB. So I'm expecting what? Another correction move to come. Even if market should what? Keep selling. I expect correction move to come. And my target for this correction move is what? These highs, this OB. I'm expecting this supply zone will push the market down. But if it doesn't, then I will be looking for buys. So I know market tapped into these zones because I will say we're not looking for any correction move coming from any zones. Yeah, we expect it to come from a higher time frame key level. In this case, what? This weekly OB right here. That's liquidity. So the next thing I go is 4 hour to see what market is doing in 4 hour time frame. Because my bias is normally in 4 hour time frame. I only use higher time frame to know overall where market is currently coming from. So we see clearly market tapped into this supply demand zone and give us what? A sweep of liquidity. Based on what I teach you guys about sweep of liquidity, we have two types of confirmation entries we use for the lower time frame and even for the higher time frame. One of them is sweep of liquidity, and the other one is what? Sorry, I'm recording. I thought I was asking. So we have two types of liquidity. The first one is market structure shift, and then the second one is sweep of liquidity. And that sweep of liquidity should come from that zone you want to buy from. So I see this sweep of liquidity. So even if for markets to continue selling down, there are zones that I'm expecting markets to reach before selling down. So these zones are higher time frame because this buy is coming from higher time frame, right? This is only what I want to see in higher time frame. Then I'll go to lower than that 1 hour time frame to look for zones that will market might react from. To look for zones that market might react from. Even if markets continue selling, there's this breaker block that I was selling from yesterday that has what? Liquidity. But what market do is that, you see, it sold down, but it did not take out this low. Any high that failed to take out a low, it automatically become an inducement. Let me clean this. Any low that failed to take out a high, it automatically become an inducement. If you have a high, then a low, If this low now fail to take out this high, so when market come back, it will use it as inducement. Then another high, another new low will do the job. If it couldn't save, it will what? Sold from this supply zone and keep selling down. This is the what? This is psychology behind this. If a strong low couldn't take out a strong high, it will automatically become an inducement. So this is what happened. Failure to swing. Market rejected back from this demand zone right here in the 30 minutes. It's much more clear in the 30-minute time frame. So I know that market doesn't want to go any lower. Yes. Market doesn't want to go anywhere because of this thing. So this is the only thing I want to see, because most of my bias is 4 hours. If I look for my bias 4 hours, in 4 hours, I mark zones that I'm expecting to what? To react. Market might react from higher time frame zones that I would watch out to, because overall is selling. So I watch out to these zones, all of these zones. I watch out to these zones, see the reaction when market what approaches these zones. All of these higher time frame POIs, all of them, I watch those zones as I'm looking for buys, because that buy is what? It's a correction move to the higher time frame, right? It's a correction move to the higher time frame. So the next time I go to do is go to the 30-minute time frame to look for the structure to see what market is printing, because structure is everything when it comes to trading. So now I know where this buy is coming from. It's not coming from any random place. It's coming from a what? Higher time frame killable. It's coming from a higher time frame killable. So the next thing I do is what? To go to 15 minutes to see if I can read the structure. So you see, currently market is what? Giving us a what? Series of what? Higher highs, higher lows, higher highs, higher lows. Market gives us another what? Higher highs. So I was here. When market was here, I saw this high got taken out. These multiple highs. I saw this high got taken out, and then this high also got taken out. Then I scaled down to 15-minute time frame because my entry was in 5-minute time frame. So if you read the structure in 15-minute time frame to see where market is buying from and where this sell is coming from, you see after this breakup structure, market give us what? This inducement as our what? First pullback, and market use this what? This breaker block to buy from. The breaker block is much more clear in the 5-minute time frame. Let me show you guys. So if you go to 5-minute time frame, look at the breaker block. You see it's much more clear in the what? In the 5-minute time frame. So this was the first buy I saw. I missed it because I was not on the chart. I don't trade on London. That's one thing about me. So I saw this first buy. So breakup structure, multiple breakup structure. This I got taken out, and then I have this inducement. So this should be the first buy I would took, but I was not in the chart. This will be the first buy. And then my stop loss below this OB right here, because I use tight stop loss. Then what is my target? My target is those zones that I marked from the high time frame. I go to that zones. I will extend my take profit to those zones, and I'm not going to take the profit. I'm just going to observe what market might do when market come to the zone. If I have a structural shift at that zone again, then I'll look for sales. And that sales is not what? It's not I'll look for sales, but that sell, I'm not going to look for sell and target this low. I'm target these lows. I'm not going to look for sales and target this low, because that is not what is happening now. These sales might come, but it's not what the correction move. The correction move, we're currently in a phase of correction move. So this impulsive move, I'm not expecting this impulsive move to come. I'm expecting them to come in what? Higher time frame POIs. Those are 4-hour POIs. I said 4-hour POIs cannot send what? It's not the zone I'm expecting the impulsive moves to come from. But if you see previously where all those impulsive moves are coming are from what? Higher time frame POIs, this breaker block. So I'm expecting markets to reach this order block, even if I will look for another impulsive move. So you see, those zones, this lower time frame 4-hour zones, I'm just looking for reaction. Market might sold from there, but that selling is not to take out this low. The target is not to take out this low, because market just doesn't move like that. If market boats, right? It must sold down, then buy again. Sold down. This is how market what is currently going. This is how market is this is the how market market structure is. It's not going straight. So all of these cells that is coming, they're coming from a higher time frame POIs, which is that 4-hour zones that I marked, right? The cell will come, and then I'll use other higher time frame to look for continuations of buys. If I see a structural shift at that cell, I will take the cell down to any higher time frame POIs, which is that 4-hour POIs, to look for continuation of buys. So that's why I said I watch out to those zones. So if I go to lower time frame, that zones that I marked, these 4-hour zones that I marked, these 4-hour zones that I marked are the zone I'm expecting what markets to pull back to. Market might respect the zone to sell down to come to any higher time frame POIs. Then we look for what continuations. There are zones for the higher time frame. You see, there's an order block here that has what another liquidity right here that market has not used now. So if market now give me a structural shift at this zone, I must sell the market down to this point of interest, and then I will be looking for what continuation of what of that buy, because we are now in what in correction phase. You guys understand? We're now in correction phase. That does not mean we'll be looking to target these lows. We're in correction phase, and those correction phase, I'm expecting the markets to come back. Those enforcement that I'm expecting the markets to come back from high time frame POIs. This high time frame order block supply zone right here. You see, if I did not see any reaction from this zone, I'll take my TP to this zone and observe what will happen at this zone. If I doesn't see any structural shift, I'll take my TP to this zone, because this is the zone I'm expecting. Even if we will have another impulsive move, it will come from this high time frame. So you see, I have 4-hour time frame that I marked. Those zones I know market might react from, but that higher time frame zones are the zone I'm expecting this impulsive move to come from. So since I know this, all I'm looking for is buys, and watch out to these zones the market may respect, which is these 4-hour zones that I marked. So I go to that 5 minutes. This is how I took my buy. I did not take this buy. I will just give you an example because I was not on the chart. It happens during London session, so I'm not during London. So the next thing I saw is what? These multiple breakup structures to the upside. I see market, you see how market approaches this zone, this 15 minutes, giving me also what? A series of lower low, lower highs, lower lows, lower highs, and give us another lower low to tap into this supply zone, demand zone, which is this breakup block. Mind you, we expect a market structure shift to happen, not randomly, to happen from a what? Higher time frame POIs. Let me explain. If we have markets selling down, right? So we expect for this bearish structure to end. We expect what? Markets to give us a structural shift. And that structural shift should not come from any random zone. It should come from a demand zone. Because sometimes something like this, you can see something in the chart like this: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then you see a higher low. Market give you a structural shift. A lot of people will mark this as their what? MSS. But this buy is not coming from any zone. It's not coming from any zone. So people will be looking for buys from here, and market will use this supply zone. It just did that to grab liquidity, and it will use this supply zone to continue selling down, to tap into that any demand zone that is here before you see another structural shift. So a lot of people make this mistake. If you see a structural shift, you see market structural shift, go down, look where this buy is coming from that caused this market structural shift. If it's not coming from a order block or breakup block, don't consider it as a breakup structure, as a market structure shift. So let's continue. So you see, when market tapped into that zone, instead of market to give us another lower low and sold down, what did market do? Let me remove this one. What did market do? It come back and take out this low, break this low again, and also break this low, and then give me an what? Inducement liquidity. Sorry. Give us what? First pullback and inducement. There are 2 points of interest right here. There are 2 points of interest. We have the breakup block, and then we have the order block here. I have one rule. So when I have 2 zones, I have an order block that is close to a breakup block. I don't use the breakup block. I've told my student this. If I have 2 zones, the breakup block that is aligned with an order block, I don't use the breakup block. So I'm going to paste this chart on this thread that I took on the screen. After this, I'm going to post it so you can see, or you can check my story on TikTok. You can see it there. I posted this before and after. Or you can go to my X, search Zach Crypto. Search what? Zax Crypto. But X, you can see this is my proper, this is my username on X. You can search Zax Crypto to go and check the before and after of this trade. So after I've seen this structural shift, that's when I look for my what? For my buys from here. And then my stop loss below this order block. What is my target? That zones that I'm expecting what market to react from this higher time frame POIs. You see, I target this high. You see it, this high, this liquidity. This liquidity, this is my target. This is my first target. I know even market will react, it will take out this liquidity. So this is my first target. Now I'm looking for entries, but there's no a good structure for me to take my entries from. But I've seen this break of structure, another break of structure, multiple break of structure to the upside. Yeah, market give me this as my first pullback, which is my inducement. And there's breaker block close to it that is in line with what? An order block again. So this is a also zone to look for continuation. And then there's also another zone right here. You see, market give me this break of structure and give this inducement. Also, there's a breaker block right here. The other block, sorry, the breaker block is not valid because my student know what I'm talking about when I say this breaker block is not valid. Breaker blocks has some characteristics that it must fulfill because before it become valid. So this is two zones I'm expecting to buy from, but this is the most valid zone. If you go to 15 minutes, you see that this one is much more clear. So because it has inducement and this one is separate inducement. So if you have two zones that has the same inducement, this will be the best ones to go for. But market, you might miss it, but never go for this one. You either miss a trade than hit yourself. So this is how I took this trade on BTCUSD. So that's it, guys. If you love this, like, comment, and then subscribe to my YouTube, and then follow me on X and TikTok. Peace out.